So using the game plan, we decided to do SPY and SPX put options first because we had noticed there was clear resistance at 660.50 with a red bearish 30-minute candlestick confirmation. Then the SPY had a breakdown and a retest forming lower highs for 90 minutes straight with a red, green, red bearish pattern at our 659 bearish level. With that being said, losing remains a personal choice. We ended up having 3 massive wins on SPY and SPX put options, which ended up totaling multiple 100% profit returns. You could have made easily over a 300% profit return. In terms of today's updated game plan, it's going to be very predictable and very lucrative. Let's get straight into that, and then towards the end, I'm going to quickly show you the trades that we ended up making during FOMC. So, in terms of today's game plan, the SPY is currently gapping up. Based off the daily chart pattern, it is stating that since the SPY is gapping up, it's likely going to be a bullish trend in gap and go. The only way SPY can flip bearish and to really want to consider buying put options for an overall bearish flip on the market would be if the SPY forms lower highs in between the previous closing price, 659.18, to right here, 658.70. If it drops below this range, reacts as a resistance, forms lower highs, forms a red, green, red, reacting bearish below this overall zone, then you're going to want to consider put options. If not, we're going to continue to focus on buying call options only. So in terms of the levels for calls on a bullish gap and go, because like I said, based off the daily chart pattern, since we are gapping up, the most likely outcome heading into today is going to be a bullish trend day. And in order for a bearish flip and in order to consider puts, we need to go below 658.70 and we need strong bearish confirmations, red, green, red, red, double green, red, lower highs, maintain resistance below that, right? So in terms of our levels for puts, we're going to be using the break and retest strategy. We're going to be using the 30-minute candlestick chart confirmations. So in terms of the overall levels that I'm looking at, for calls here on a bullish trend day, these are the levels that I'm looking for calls here on a bullish trend day. So we have a break and retest level right here that has not been tested during normal trading hours. It's going to be in between the range. I want you to keep an eye on this level, man. It's going to be very, very key. This, 660, 660.50, 660.50 to 659.50 to 660. That's going to be your first call range. So at or close or in between that range, if you're seeing a green, red, green, bullish 30-minute candlestick confirmation, you've seen this, green, red, green, bullish, pushes higher within time, right? If you're seeing that green, red, green, bullish 30-minute candlestick confirmation on a break and retest, previous resistance right here, break, retest, green, red, green, bullish fucking uptrend, it's like, dude, for those of you trading futures, you should be getting shit rich with my curriculum. You should be shouting at the roof of your lungs that losing is a personal choice because it works nonstop. This is another break. This is another retest. Green, red, green. Green, red, green. It's like, dude, it just keeps on pushing higher with this green, red, fucking green when you're using it at break and retest levels, right? This would have been the next break and retest level. Not all the way up here, but this was actually considered a red, green, red because red came first. Red, green, red. Then it starts to sell off. Man, losing is a personal choice. If you use the simple levels with break and retest and just wait for the best levels at the best prices with the best confirmations like green, red, green on a bullish trend with calls, you're going to be printing money at the speed of light. So these are going to be our levels. These are going to be all the buy zones for today, 659.50, 660, 660.50. Right here, you got some higher break and retest, 661.50 to 662.30. Those are going to be our 2 buy zones. We have 2 buy zones for calls. This is the lower zone right here. This is the higher zone right here, right? So lower zone, 659.50, 660, 660.50. Higher zone, 661.50 to 662.30, right? That's our higher zone, right? Now, the only way we're going to consider playing an even higher zone is if we're getting like a strong breakout and then the best confirmations possible. I mean, in terms of like next levels above that would be like 663.80 to 600 and let's see, 63, right in between that zone. That'd be the absolute highest, right? So in order to play that zone, gonna need very strong, safe bullish confirmations. Green, red, green, double red, green, preferably strong consolidation. These are considered lower highs right here. So ideally like a nice spike, maybe even a retest to like 665. But I'll be keeping an eye on it, man. But preferably, I would like the lower zone. I'm going to be focused on the lower zones. This is the absolute highest zone. To consider the higher zone, ideally, I'm going to want to break above 664 at the bare minimum. Nice breakout, drop back down, retest, best confirmations, right? In the meantime, I'm going to be eyeing these levels. These are the best levels. I'm keeping an eye on them. This zone right here, 661s to 662s, this 1 point zone, and 600 and 600 and mid 59 to 660.30, right? Those are going to be our buy zones, man. It's that simple. Wait for the market to react bullish, consolidation, green, red, green, higher support. Wait for the bullish confirmations that we use on a bullish trend day, on a break and retest. And what's going to happen is it's going to try to close overall strong. It already had a very nice breakout from this resistance at 661.90 to 662.50, and right now it's trying to form support and have a successful retest because the 30-minute candlesticks keep closing above that previous resistance. So if it maintains above this, and look, this will be the final one, this will be the key market open play. Put it this way, look, if we have a break and retest above 662.50 to 662.80, and then keep your eyes as well on 663.15. Those are the three levels for the Morton idea. If it reacts bullish at that level, I'm in calls. If it does not react bullish at that level, then I'm waiting for lower levels. Lower levels, 661.50, 661, 659.60, 660. Those are all the lower levels, right? So to buy calls at this higher level, absolute highest would be considered like 663.15. Right now, it's trying to attempt bullish, so it just needs to maintain above 661.70, breakout, retest, form green bullish 30-minute candlestick confirmations. I'd be in calls in that situation for a strong breakout, right? Profit targets would be 663.80 to 665 in that particular situation. At some point, market can attempt to have a small pullback towards 665 for bearish confirmations. Just be aware of that. So those are the overall trade ideas. Those are the overall game plans. I've seen this pattern before, and basically what it's saying is the most likely outcome is to buy the fucking calls, and it might have to be at a higher level. So if we get a clean break with bullish 30-minute candlestick confirmations at 663, I'm in fucking calls. Those are the key levels, man. If it reacts bearish and starts to go below 661.30, then I'm waiting for the lower zone at 659.50 to 660 to 660.50. Most likely outcome is a strong bullish trend day where we start to break above 663.50. For those of you who traded futures, you should already be green as fuck with the curriculum, just studying how it's having a breakout, a retest, green, red, green. And again, I've seen this pattern before, and this is how I was able to trade FOMC so successfully yesterday, because I literally relived the past day, trading it throughout history. I've traded it before, man. I'm telling you what I'm seeing right now. This is overall bullish, and the best, simplest play is just calls on a clear break of 663, right? If you just go back historically and look at this fucking pattern, man, you're going to see whenever we have this type of middle finger form, right? This type of middle finger form, it's typically bullish, and it only flips bearish when it goes under the wick. And the wick is right here below 658.70 to 659.30, right? And in terms of that situation, if it did react bearish, then it would start to drop off to 657.50 to 654. And man, for those of you who watched the weekly game plan, man, that I posted earlier this week, who remembers the call zone, man? All of the fucking call zones printed. If you would have just bought and held calls, man, they all fucking printed. Look at this. This was our lower call zone right here at 656, This one ended up printing 656. It went 2 points under. Doesn't matter. We don't use stop losses because we don't fucking take L's like that. And as you can see, 656, if you would have bought calls, would have dropped 2 points. And then boom, it rockets to 660 for a strong, massive fucking win. Phenomenal risk reward. Now it's at 660 fucking 5, man. Look, losing's a personal fucking choice. If you're red, the game is not for you. The game plan literally taught you how to trade both ways. The game plan literally said if we break above 660.50 and react bullish to buy fucking calls, once the SPY started finally breaking above that level, forming green, red, green, surely enough, it breaks, it retests, it breaks, it retests, it breaks, it retests. Absolutely no reason for calls before then, because if you looked at the fucking chart, 660.50 was a red bearish death candle. This is a green, red, bearish overall reversal pattern. This is a breakdown. This is a retest for 90 minutes with a red, green, red, red, green, red. Lower high consolidation formation for over 2 fucking hours with a very nice drop where our puts went in the money. So losing is a personal fucking choice. In terms of yesterday, I had 2 trades. The first trade was an L. It was a swing trade on Tesla. Had I held my swing trade, it would have been a massive fucking win. Again, another reason why to just never sell for L's, man. But I wanted to sell to L because I really just wanted to focus on SPY after that because Tesla wasn't gapping up as quickly as I wanted it to. And I said, I'm just going to focus on SPY because it's setting up for the most highly predictable, lucrative trading opportunity to make it all back and more. And surely enough, I flipped to red to green on the day. So I had a 40% loss on Tesla swing trade. I ended up swing trading calls, sold those for a 40% loss. And now they're green as fuck, you know. And for those of you who don't know, Ninja, he's in a long-term swing trade on Tesla calls. Highly recommend it, man, because the stock's going to go above $500 long-term. So if you're interested in buying some leaps, some longer terms, I mean, not necessarily leaps, but a couple months out, I would strongly recommend going a couple months out on Tesla call options. If you have some passive, you know, money, just looking to double or triple that, it's going to fucking print, man. So anyways, I started off my day with a swing trade loss, and then I made it all back with SPY. You know, my bread and butter, absolutely fucking killing it every single day with SPY. So, this was the trade on SPY right here at 11:30 a.m. 558 puts at 190 cents, right? You go to 11:30 a.m. This is where I got in. I got in right here. You see, this is 11:30 a.m. This is the opening. When this 30-minute candlestick opened, when it wasn't even formed, I got in on the puts, right? Why did I do that? Because 660.50 was a red bearish 30-minute candlestick confirmation. Red, green, red, bearish lower highs. Then the market started to drop, right? So 558 puts for 190 cents. And then I ended up selling those for a 50% plus profit return at 329 cents. Green as fuck on the puts, right? And then in terms of the trades that G-Roar ended up making, as you could see, this was 2 for 3. First trade on the day, 654 puts. Those literally went at the money, 53 cents to 106 cents. You know, selling for a 100% profit return. As you can see right here, 45 to 160 cents. Fucking phenomenal. We were both green enough to walk away because we both had massive W's. And then this trade in between was a loss on SPX puts, which is completely fine because the next trade on SPX puts was 300%. Let's buy 6595 SPX puts for 85 cents. Went deep in the money to 320 cents. Multiple 100% profit return. So losing remains a personal choice. We absolutely crushed it, man. We are consistently fucking killing it every single fucking week. It's the first link down below in the description if you want to print money with us at the speed of light. 654 puts, as you can see right here, $531 profit, 50% profit return. It's unlimited fucking winning, and it's unlimited fucking printing nonstop. Lift calls, $500 profit on that, self-sufficiency. SPX calls, self-sufficiency, 60% return on that. I'm telling you, if you watched the game plan earlier this week, it said to buy calls at that lower oversold level, and surely enough, we had a massive bounce from it. 655 calls, you know, 15% gain, $1,200 profit. Listen, man, it's unlimited winning. It's unlimited fucking printing. If you want to join and trade alongside us, it's the first link down below within the description. You gain instant access to our secure private network and community who trade zero-date options, futures, SPY, SPX. It's the first link down below within the description. You also gain access to a real-time zero-date options trading alert system. We buy cheap, low-risk, far out-of-the-money plays on SPY and SPX. We're known for selling them deep in the money. That's our profit target, in the money, for the biggest percentage gains. The most we put into these trades is our max risk per trade. The most we lose is what we're willing to risk, what we put in, our max risk per trade. Could be a couple percentage of your account on each trade, right? The wins are always bigger than the L's, percentage-wise, right? And also, you're going to see the wins are bigger than the L's because we add to winners, which doubles to triples the gains. And the way to safely add to winners and increase the gains is by setting profit stops. If you're green on a trade and you add a winner and you set a profit stop, it's impossible to go green to red. So losing is a personal choice. So look, our group is maintaining at all-time highs. Every single day, people are joining non-fucking stop. It's unlimited winning. It's unlimited fucking printing. Literally nobody's fucking leaving because they've never found another group who's this consistent with far out of the money zero date options, who is the best real-time zero date options trading alert system in the game, where you trade the trend, you hold the trades, you don't use stop losses, you set profit stops when you're green, you add to winners to double to triple the gains, and the wins are always bigger than the L's because the percentage gains are always bigger, and we double to triple the gains and add to the winners, which double to triples the gains, man. And we have the highest win rate in the game doing this. Every single week, we hit at least 2 trades where we make and sell for a 1,000% return each. And you're going to see it's the strongest foundation to be successful in the trading with a small account. Also, with a low win rate. You know, we have the highest win rate in the game, but if you have a low win rate, you're going to see you could be profitable in here with a 30% win rate. Because when you make 1,000% return on a trade, you can literally fucking lose fucking 9 trades in a row and still be fucking profitable. Still be fucking green, man. And when you add to the winner, you can lose fucking 15, 18 trades a row in that situation when you add to a winner on 1,000%. So you're going to see by winning big percentage, by holding the trades for bigger gains in the money, and by adding to winners, you're going to see you don't need a high win rate. That foundation sets you up for success. You're going to see literally having a low win rate, it's just icing on the cake if you had a higher win rate. You don't fucking need it. But you're going to see with us, we have the highest win rate in the game. We rarely ever have red days. It's very, very rare we have a red day. We probably have, I would say, 1 or 2 red days every 3 months. Every 3 to 4 months, 1 or 2 red days max. Green every single fucking week, even if we have a red day. Because risk management. The green is always bigger than the fucking red, man. Add to the winners, proper risk management, unlimited fucking winning, unlimited fucking printing, plus we do have an extremely high win rate. So it's the first thing down below in the description, man. I made it very, very clear, man. 658 puts in the money. I was telling the whole fucking chat puts non-fucking stop. I was telling them, you know, if you're not in fucking puts, you're a fucking degenerate. The puts are going to go in the fucking money. Look, man, we fucking banked on these fucking puts, man. And the game plan, if you watched earlier this week, literally said to buy calls at the oversold fucking level. Look at this, man. 654 fucking puts. Look at this. 56% return, 1,000%. The entire team, trading FOMC, easily cleared 6 figures yesterday just on puts alone. And if you watched the game plan earlier this week, it gave you the best level for fucking calls. So, with that being said, I'm going to be closing out this video with this. If SPY breaks above, which it looks like it's going to fucking do, if we start ripping above 662.60 to 663, I'm buying fucking calls. We're learning fucking Team Roar. We're going to be printed at the speed of fucking light. This is already setting up for a bullish fucking pattern. Look at this shit, man. Green, red, bearish sell-off. Now look, red, green, break, retest, bullish fucking move. This is how you read the market. I'm getting ready to make a massive trade. With that being said, it's the first link down below in the description if you want to print money at the speed of light non-fucking stop.